This is Jim Emter, Van Ahn Company, Alexandria, Minnesota, with the closing grain and livestock comments for June 8th, 2018. Corn market on the day up 1 to 1.5. Beans down 4 3/4 to 5. Chicago wheat down 6 to 7.5. Minneapolis down 2 to 5 1/4. Kansas City down 6 to 7 3/4. On the week, corn market down 13 3/4. Beans down 52. Chicago wheat down 3 1/4, Minneapolis down 11 3/4, Kansas City down 2.5. So, quick summary: trade tariffs along with very good looking weather, a great emergence, great looking stands, great looking crop ratings are the reasons for the break. What we're going to look to next week: key support levels. We've got July corn at 378, where we kind of closed around today. Next count is 363. I think it's a lot to ask for corn to get down that low personally, so I look for support here. But markets had a couple threats of trying to break and kind of hovers right around this area. For new crop, that's a 395 support area, then down to 384. And we just think these support areas we're around are going to hold here. Just an opinion, and we'll have to see what the market decides next week. Soybeans, on the other hand, 979 seems like the price count we're going down to off the November. 941 seems a little deep right now, so we're going to look to that as our next target and look for recovery off that. And the Minneapolis wheat market around that 595 area. We're going to come back after a weekend of G7 talks. We've also got the SOC out of China meeting. Those are some major powerhouses in Russia, China, India, and others meeting this Saturday as well. So we're going to come back with a lot of new political updates. The weather forecast looks good for the next couple weeks, but that first sign of heat, I think, will build some premium right back into this market, and we look for that to happen here in about 2 weeks. So we've got a couple weeks of good weather yet, and then maybe our next weather threat for the season there ahead. Remember, things are a little bit tight in the grains here for corn and wheat, particularly worldwide, especially if we have some problems over in Europe and more Black Sea regions, and we'll keep an eye on that as we work ahead. Nothing that'll run away, and maybe the highs are in, but we still think there's a lot of dynamics left to play out here, so we're not going to make that as a strong forecast by any means. Some may choose to, and they may be right, but right now a lot of volatility ahead. For the feeder cattle market, up 30 to 120 on the day for feeders. Lives up 62.5 to 165. Hog market up 55 to 147.5. On the week, feeder cattle up 95, live cattle up 512.5, hogs up 227.5. Most of the cash trade, 111 to 115 on average this week. Cattle looked poised to try to extend here a bit, and we look for room up to that 200-day moving average, which is around 109 off the August. Exports were slow this week, and I think one of the limiting factors, but as we work through summer, we see strong grilling season ahead, along with packer margin strong, the ability to drive this market up, especially as numbers get current. Hogs, on the other hand, going to be watching this political scope much more closely. Hog market had a good week, up towards the highs now, but we're into resistance, so finding that next story may be difficult. Be attentive to marketing here into these levels. This has been Jim Emter, Van Ahn Company, Alexandria, Minnesota. Trading in futures and options involves risk of loss and is not suitable for all producers. Past performance is not indicative of future results. This is a solicitation. Have a great weekend.